everybody, and welcome to our analysis session on the 2020 RSPA VAR Sales Compensation Study. I'm Jim Roddy, the Vice President of Marketing for the RSPA and your host for today. Thank you so much for joining us. This webinar, the live session for everybody who's listening live, you're very fortunate. This session was sold out. Not that we were making people pay, but we had limited numbers of seats for this session, and within 2 hours, it was completely booked up. So those of you who are online live, consider yourself fortunate to be able to grab a seat so we can have a dialogue here today. For those of you listening and watching on demand, thank you very much for your interest. You can see my email is on the screen. If you want to have any of your questions answered watching this on demand, feel free to reach out to us and we'll be happy to talk with you. Either I'm happy to answer the question or point you to the right resource inside of the RSPA. So we will take questions during the live webinar today. A couple ways to do that. One, at any point during this session, you see the chat function that is in, probably depends on your browser, but for a lot of you, it's going to be on the bottom right of your screen. Just feel free to enter your message in there, and we would be more than happy to answer that for you. Some we might be able to get to during the session, but definitely we will be able to get to what you have to say at the end of the session today. Also, we will open up the microphones for everybody at the end of the session, and you will be able to just ask your questions so we can actually have a Q&A dialogue, either between us or maybe even a few folks might want to join in. And this session is being recorded, and you will be able to receive a copy afterwards. We'll make sure to get that to you. And I can say with confidence that the chat function and the audio is working. Thank you to John Sanders and Dean Hasserson for showing up early and testing that out for us. Thank you very much, gentlemen. All right, so before we get going, for those of you who might be joining us and are new to the RSPA, RSPA stands for the Retail Solutions Providers Association. It's the only association dedicated to the point of sale and retail IT channels. The mission of the RSPA is to accelerate the success of its members in the point of sale ecosystem by providing knowledge and connections. And our core audience is resellers, VARs, software developer executives, payment processors, hardware manufacturers, distributors. That is really the world that we play in. That is our membership base. And we offer to them education, certification, hotlines for legal, security, sales, and business advice. We also offer discounts on other services to assist members with becoming and remaining successful. And the RSPA is best known for its signature events, Retail Now and the Inspire Leadership Conference, which provide face-to-face learning and networking opportunities. You want to save the date for Retail Now 2020 in Las Vegas, August 2nd through 5th at the Venetian. And so if you're a non-member watching this on demand, you might be saying, is membership right for me? Well, we have a tool for that. We've developed an ROI calculator so you can determine the return on investment you would receive as an RSPA member. You essentially take what you would pay for annual membership dues and then all the different services underneath and what those might cost you outside of the RSPA. So again, if you want more information on this, we'd be happy to talk this through with you. Just reach out to membership@gorspa.org. There's another way to keep in touch with us. We have a podcast called The Trusted Advisor. It's a channel-focused podcast and video series. It's powered by the RSPA. It's designed specifically for point-of-sale resellers and software developers. And the goal of the podcast is to educate you on the topics of technology, leadership, management, sales, marketing, and other small business best practices. You can subscribe to through the RSPA YouTube channel, or you can also subscribe wherever you get podcasts, Apple, Stitcher, Spotify, so you never miss an episode. And if you'd like to learn more best practices for VARs and ISVs beyond the audio, we have our RSPA blog, is content that is created by the RSPA staff. And then we also have a community IQ section, and that is content created by our members. You can find that by going to gorspa.org. You see the URL at the bottom of the screen there. And then you can just click on resources and you'll see RSPA blog, and you'll also see under that community IQ. All right, so let's get ready to rock and roll and let's talk sales compensation. So retail IT VARs who have transitioned over the past few years to the as-a-service, the recurring revenue business model, they've really seen massive changes to their business. So it can be from product offering, it can be from cash flow, merchant relationships, but maybe the trickiest aspect of this transformation has been sales rep compensation. You can't pay the same way you did before because you don't have a $5,000, $10,000, $15,000 upfront sale. You have something that's coming in, hopefully in the form of hundreds of dollars per month. And so what VARs had to do, even before this transition, but especially during the transition, was they would just resort on test and measure approach with their salespeople because there was no statistically based available information to them. And so they just hoped to kind of learn along the way what works, what didn't work. And they're trying to balance, how do I retain my top revenue generators and pay them fairly while also keeping the lights on, like don't want to crush the cash flow. And so that's why the RSPA commissioned the 2020 VAR sales compensation study that we're going to talk about today. Just as a little bit of background, we garnered responses from 52 value-added resellers, all of them RSPA members, and our hope is that resellers will be able to use this info to gain a clear perspective of sales compensation trends and then best practices so they can manage their organizations most effectively. This is actually the second time we're talking about this compensation study. Back at RSPA Inspire, the leadership conference, January 26th through 29th, that was held in the Bahamas in Nassau, we had a session on this and we rolled out some of the findings that we had, but this is kind of a longer version of that for you. And again, as we said at the outset, every registrant to this webinar is going to receive their own copy of the 2020 VAR sales compensation study and then this analysis session as well. All right, well, let's jump into exactly what the survey told us. So first, the main vertical markets, like who took this survey. So as you would suspect, if you're familiar with the RSPA, hospitality, retail, and grocery were the leading verticals. You can see hospitality and restaurants, 86.5% of the survey respondents said it was one of their primary verticals. Retail was about half of the audience, and then grocery and C-store, you can see 42.3%. We had 9.6 saying their primary verticals were, other than those, but everybody played in one of those three markets, and some people talked about they also did distribution as well. So this is the audience that we're talking about. And then a key question, our survey that started off, it says, what percentage of your overall sales revenue is recurring revenue? So let's break this down and then we'll talk about why this is important. So we broke it down into these categories here. So first, almost all of my revenue is recurring. So that's 85 to 100%. Then most of my revenue is recurring. You can see that's about, 17% of the audience. Then who said about half my revenue is recurring, between 40 and 59%. So you can see 32.7% of the VARs put themselves in that category. Then some of my revenue is recurring, 30.8%, and then barely any of my revenue is recurring, 9.6%. A good note is at the bottom, nobody said none of my revenue is recurring. Everybody at some point is collecting some sort of recurring revenue. And I can tell you from asking this question over the past few years, that was not always the case. So everybody's on board from some semblance of a recurring revenue standpoint. You can see only 10% of the market is under 15%. And so the reason this question is important is because in the actual study, it's the lens through which we compared and contrasted many of the resellers' answers in the report. So we took all the data we collected and we looked at it three ways. First, we looked at it collectively, like what did everybody say? How did they answer those questions? That's a lot of what we're going to share with you in this session today. Then we broke out the VARs with recurring revenue under 40%. So those bottom two circles there, they said some or barely any of my revenue is recurring. Then we broke out the data for the top two circles. Almost all of my revenue is recurring or most of it is. And so the theory was, as we talked with channel executives, they thought comp philosophy, structures, and practices are going to vary based on the volume of the VAR's recurring revenue, right? If you're in that lower category, you're going to behave differently. If you're in that upper category, you're going to behave differently from those other folks. And so we tested that theory throughout the report, and I will say there are some areas where it was radically different, but in a lot of areas, it didn't make that much of a difference. Now, we're not going to dive into all those specifics here during this session today, because quite frankly, it's almost too much to digest verbally and to toggle back and forth between all sorts of screens. So we're going to give you some of the higher level stuff. Again, if you want to dive in and see how those broke out from lots of recurring revenue versus less recurring revenue. All that detail is in the report. What we're doing for this session today is we have 6 findings that we want to share with you, and we think these are 6 key findings that will hopefully enlighten you and help you understand sales comp a little bit better. So the first finding that we had is VARs don't adjust comp philosophy or structure for new sales reps. Let's look at the data first, and then I'll get into the why behind it. So what we did was we said, how do you compensate your tenured sales reps? And then we asked a question about how do you compensate newer sales reps. So you can see on the slide here, 13.5% of VARs paid their tenured sales reps 100% commission, about 27% paid a low base salary with high commission, and then about half of them pay an evenly split salary and commission. You can see high base, low commission, and straight salary with no commission account for about 10% of the study. Okay, so again, this is for the tenured sales reps. Now let's look at the newer sales reps. So 4% pay newer sales reps 100% commission, 28% low base, high commission, 52% evenly split salary and commission, 12% high base, low commission, 4 pay a straight salary with no commission whatsoever. So our first observation on these numbers is that the philosophies between how the tenured sales reps are paid and newer sales reps are paid really don't vary much at all. So if you're looking at the significant changes in the numbers here, you'll see for the new reps, 4%, 100% commission. And if we toggle back to that prior screen, you're seeing 13.5% are higher commission. Again, a 9% difference thereabouts, but that is really where this, stands apart. That's really the only aberration between how VARs look at newer sales reps versus tenured sales reps. Like look at that middle circle right there, 48.1% pay an evenly split salary and commission, 52%, for the newer reps. So it's not radically different from that standpoint. What surprised me with this is, looking inside a lot of other organizations, they tend to have a longer ramp-up time for their newer sales reps, right? To get them on 100% commission is almost too risky for those new sales reps. And so they give them time to learn about the sale, to understand the product better, understand the market better, and they'll give them more time on a different kind of a scale. Now, if you're dealing with ISOs is a way shorter learning curve. This is not the best analogy, but if you remember phone book sales, like and you know anybody who ever sold phone book ads back in the day when that was a thing, their training session was like 2 or 3 intense weeks that they would have off site, and then they'd say, here you go knock yourself out. The ISO world is more like that. I would have thought the VAR world would be a little bit more complex than that because you're trying to be a trusted advisor and selling total solutions. But again, that's not what we saw as much. The only real difference was in that 100% commission range. So again, that is our first finding, that VARs don't adjust their comp philosophy or structure for new sales reps. All right, let's move on to finding number 2. The most popular SaaS compensation practice is pay now. So again, this is the solutions as a service compensation practice. It is pay now is what we see is most common. And so what we did was we asked this question: do you have a different compensation structure for your sales reps when they close a SaaS sale versus a traditional sale? And let's look and see what the chart says. So on the far left, yes, SaaS sales computed differently from traditional sales was answered by about 56%. You can see about 29% said no, SaaS and traditional sales follow the same structure. 10% said they don't sell SaaS. And then 6%, I thought that was interesting, they don't even sell traditional POS. So we have 6% of the respondents to this survey said they don't even participate in that. So again, you can see clear is that there is a difference between how folks are computing those sales. A little bit over half are doing that. And then a follow-up question to this is, we asked, which of these SaaS compensation philosophies do you subscribe to? And our study showed the following: a little over a third pay now. They pay the sales rep a lump commission shortly after the SaaS sale. Then you can see, I'll jump down, I'll go do this in kind of more linear order. 29% follow a hybrid philosophy of paying now and paying overtime. That's about 29%. About 17% consistently pay overtime. They pay the sales rep a consistent commission rate over a significant period of time. And you can see only 4% offered a declining pay over time. So a higher commission, then they kind of step ladder that down. And so this is what we see. Again, let's look at these two together. Yes, that VARs are compensating differently for SaaS sales. And then how are they doing that? You can see there's a lot that are paying now. And then there's also folks who offer a hybrid standpoint. And so the numbers that jumped out in this as we were putting this together is that the most popular sales comp philosophy is that pay now, followed by the pay over time. And then I was really surprised that only 4% offer declining pay over time. When we talk with a lot of resellers about what concerns they have from a SaaS compensation philosophy, their concern is that their reps will turn into like insurance salespeople, right? If you sell a whole bunch of insurance policies and those keep renewing and renewing, you don't have to sell anything more and you're going to keep making money, which is why your insurance agent is on the golf course so often, because they don't have to make many more new sales. And so a lot of VARs are saying, boy, how do I make sure that that doesn't happen with my sales reps? And again, what we're seeing right now is the way that they're figuring that out, instead of offering a declining pay over time, they're really following up on the, again, third of them are paying more of a lump sum commission after the sale. What that does is that creates a cash flow issue for you. If you're only getting X amount up front on that SaaS sale, but you're paying a lump sum, you're kind of going in the red from that standpoint. But a lot of VARs are ascribing to that philosophy because it's simpler. It takes the sale and gets it very close to the reward standpoint, and that way they keep their sales rep hungry. Here you go, here's your money now, but if you don't keep selling more of this stuff, it's all going to be gone very shortly down the road. Now, we didn't dive into exact structures of how VARs are handling this, like in terms of, do you pay them all the money up front? Do you give them the first 2 months 100%, they get all the commission from that? We didn't dive into that, but that, again, this is to let you know that we're seeing a big chunk of them. This is the way that they are paying their sales reps. So again, finding number 2, the most popular SaaS compensation practice is to pay now. I'll give a little bit more color now in terms of what we mean by pay now. So what is a typical life cycle? So again, we didn't get into exact structure, but this is the life cycle. So you can see, have all their commission paid up front. So right off the bat, you can see that's about 30%, so 28.9%. Then if you go down the second from the bottom circle there, or on the far right in the bar chart, in perpetuity, you can see about the same amount say that they receive at least some commission as long as we maintain the customer. So you can see a couple different philosophies that are going on there. Some say, let's boom, get this all over with. And other folks say, we're at least going to make sure that they get some sort of commission over the span of time. Another common answer you can see on there was 1 to 6 months. But really that, was far behind all commission up front and in perpetuity. The other thing, and I'll just share a little data point with you, if the 1 to 6 months was 13.5% of the overall folks who took this study, a quarter of that came out of that some barely group. So if you're talking about resellers who are offering or receiving a lot of recurring revenue from their customers, most of them are following either the all commission upfront or the in perpetuity. It tends to be the folks in that some and barely recurring revenue following this. And if I can ask folks, if you can mute yourself, it sounds like we do have somebody on the line there. Hope you're feeling better. It sounds like you have a little cough, but if you're able to mute yourself, we would appreciate that. The other thing I'll share is, now there's no chart for this, but our study shows that about 1/3 of our respondents, so 32.7%, they will claw back sales rep pay due to customer attrition, but we saw that 51.9%, so a little over half, do not claw back for SaaS sales. So that's an interesting data point there in terms of how do you set up? If your customer goes away, does a customer, are you going to claw back what you paid in that lump sum, or do you just kind of let it ride? And we see a couple differing philosophies there. I will pause right here to say a couple things. First, all these details we're sharing right now, it doesn't mean that the leading answer is right or wrong. It just merely is, this is what is most common among resellers. So it can let you know if you're paying out over 7 to 12 months, looking at the chart that we have right now, you're like the only one doing it, right? That's an unusual way of doing it. So if you're looking for what are the commonalities, that's what this report tells. And my guess would be there are reasons why there are commonalities, is because a lot of folks have tested out what works best in that regard. Okay, let's pause for one more thing before we get to another chart and just have a quick reminder about Retail Now 2020, August 2nd through 5th at the Venetian in Las Vegas. For those not familiar with Retail Now, it's where about 2,000 folks in the retail IT channel get together. Again, it's resellers, ISVs, payment companies, manufacturers, distributors, everybody who's serious about the retail IT channel. They get together for education. We have a trade show with nearly 200 exhibitors, and it is really just a way for you to, over the span of 3.5 days, really get a ton of data to reshape your business going forward and learn about a lot of new products and providers in the retail IT channel. So again, save that date, August 2nd through 5th, Retail Now in Venetian. Retail Now is where the industry meets. End of commercial. All right, finding number 3. If you can't read this chart, you really need to go see an eye doctor because it's in like 42-point font here. So finding number 3, nearly 2/3 of retail IT VARs pay reps on gross margin. So when we created this study, we bounced off RSPA members and said, is this a good question? And they said, yeah, because here's how we do it, but we're not sure how other folks are doing this. And so we asked, do you pay your commission on the gross sale or the gross margin? And the slide is pretty clear that you can see from a 2-to-1 margin, no pun intended, you see the VARs responded, they are paying based on the gross margin versus the gross sale. So now when I've talked to resellers, you might ask, why would they do this? Because I would think gross sale would be much easier to compute, right? You don't have to get into the how much margin are we making on this? What are all the costs that go into it? But a lot of resellers feel that's worth the work because they want to give their sales reps some latitude to negotiate a deal. And they figure if they are allowing them to negotiate to some degree with that margin, the rep is really taking a lot of money out of their pocket because anything they lower from a sales price is going to hit that margin even more significantly. And so they want to make sure that they are making money on every single deal in the long term. One reseller who I talked with a couple of years ago said he really wanted to beef up his sales at the end of the year, so he started cutting rates and not paying attention to his margin, and he ended up with a whole lot of jobs and was losing money on some of them. And it was a big regret of his, and he almost spent the entire year trying to get it back up to speed. So this philosophy of paying more on gross margin than the gross sale is really encouraging the VAR sales rep to think like the business owner, right? If you are compensating people and they feel the same way that you do, they feel the same way the company does when a sale comes in, that's how a lot of folks are aligning their commission, right? Because you could have a giant dollar-wise revenue sale, but if there's no margin in it, you as a business owner are like, I'd rather not do that. I'd rather do 5 small deals that have a lot of margin in it. So that's where you can see a lot of VARs are going down this path in terms of that they are paying on gross margin versus gross sale, again, to a 2-to-1 margin. All right, so that is finding number 3 again. Nearly 2/3 of retail IT VARs pay reps on gross margin. Before we get to finding number 4, again, remember, we're going to be able to answer your questions at the end of this conversation today, or you can find a chat functionality. Feel free to lob us any of your questions right now, and we would appreciate being able to get those as well. All right, finding number 4. Some VARs hardly ever change their comp plan. So we asked the question, how often do you review and adjust your company's sales compensation plan? And you can see here on the slide, the leading answer is that purple bar right there, third from the left. Every year, half of the survey respondents adjust their compensation plan every year. What I was really surprised with is the second leading answer is less frequently than every 3 years. You have about 27% of the resellers are doing that. So that means they had the comp plan in 2017, they had the comp plan in 2018, it didn't change at all. They had the comp plan in 2019, it didn't change at all. And there's a high likelihood it didn't change at all for 2020 as well, or it's not going to change. Again, found that very surprising because if you conduct an online search, just in general, not thinking about the channel, but thinking about from a general SMB best practice standpoint, the most common answer is over 12 months. And again, that was the leading answer in our survey, but it was still only just half of the respondents. And so really surprising to see that a lot of VARs are just letting it go year to year. Now, again, we didn't dive into the why. It could be because they only have 1 or 2 sales reps. There's not a lot of changes that they have to make. But I can say I remember engaging with a larger reseller, and they had so many long-time tenured sales reps that they hadn't adjusted the compensation in 7 years because they were afraid if they did something, it might harm the sales rep and they would lose the sales rep. So it was almost like, wow, the rep is really dictating here what's going on. Now, they did share, yeah, their business is changing. There's a lot of things going on from a recurring revenue standpoint. Yeah, it's a real struggle for us because it doesn't seem fair. It seems like the rep is really making out more than the company is in this regard, but they were too nervous to make those changes. So that I think would fall into that category. You find a lot of folks who fit into that attitude of their salespeople are their bread and butter. They have a lot of the customer relationships, and if I lose that, I could be in some real trouble. So again, the why is some anecdotal speculation, but the big thing that we see here is the leading answer is every year adjusting sales comp, and then some folks are waiting quite a long time. Everything else is really lagging behind from that standpoint. So again, finding number 4, some VARs hardly ever change their comp plan. All right, finding number 5. Hold on tight because look at this, all the charts and all the dots on here, and we'll dive into it in a little bit. What this is telling you is 1/5 of high-performing VAR sales reps earn in excess of $170,000 per year. So we're talking dollars and cents now. We've been talking about a lot of philosophies up to this point. And so we asked VARs to share total comp figures in 2 buckets. First was for their high-performing sales reps, and then was for their average sales reps. And so let's look at the high performers first. Again, so what jumps out here? What are the leading answers to this question about total comp for high-performing sales rep? You see the green bar on the far left, the dark green, the forest green. 61 to 70K is one of the leading answers that you can see from that standpoint. But close to it is over 200K, if not identical. That's the peach bar on the far right. There are some very well compensated sales reps in today's retail IT channel. You can see the leading answer, or the third leading answer, is this navy blue bar in the middle between 111 and 120K, which again is nothing to sneeze at either. So again, lower pay is on the left of this, higher pay is on the right, and you can see that there are a lot of folks who are making good money in this degree. So just, I guess, one thing to clarify in here is this wasn't just what is their pay. This said includes salary, commission, bonuses, and spiffs, but do not include benefits. It was essentially what monetarily are you giving them, because benefits can really get this all murky. So when you're talking about pay dollars, like the W-2 that somebody would have, these are the numbers that we're talking about. And so you can see the answers span the entire spectrum. You do see a few folks, I mean, it's below 3% on the far left, paying under 30K for their sales reps. But the most common answers, we talked about, those specifically, but you can see if you lump them together, 61 to 80K, that's the forest green and the orange, that's 22%. The 101K to 120K, that's another 20%. And then that over 200K, that's 14%. We were also curious how much of that compensation was split between base and commission. So we wanted to say, what's the typical base salary for a high performing sales rep? Now, I don't have a chart for this because we only have the average sales rep to do that. But what they said was having no base salary was very uncommon, only 6%. But also it was rare having a base salary over 70K. That was only 18%. The most common range for base salaries were between 41 and 60K, and that was a little over a third of our audience. Again, if you want full details of it, that's in the report, but that'll let you know if you have folks here who are making, over $111,000, over $200,000, very little of that is base. There's a lot of performance components that go into that. So again, this is the chart for high performing sales reps. Now let's look at the average sales reps. And this one's a little bit easier to read because everything gets clustered a bit together. And so, of course, it would be a dream if resellers only had to manage the high performing reps, but we asked the same question about total comp for the average sales rep in your organization. Again, salary, commission, bonuses, spiffs does not include benefits. You can see the two leading answers neck and neck there are 71 to 80K and 81 to 90K. But you can see there's also a couple steps below that. 51 to 60K is third, followed by 61 to 70K as well. And so some of the differences that we see between the two charts, I won't toggle back and forth because they look so different. So in the higher pay ranges, 101 to 120K, the average reps, only 6% fit into that category. High performing reps, 20% fit into that category. Again, that's 101 to 120K. Also over 170K, only 2% of the average reps receive that money. 20% of the high performing reps did in that regard. So that's how we're comparing those two. And then just to give a little detail on the base salary, the answers tend to cluster between 21 and 50K. 70% of respondents fell into that range between 21 and 50K. And if you want to dive deep into that even further, 32% fit into that 31 to 40K range. Only 2% of respondents pay their average reps a base of over $70,000. Okay, and so let's dive in and talk about another detail that we have right here. And so before I get to the chart, just to give a little background. So an important question when you're onboarding any new sales rep is understanding how long they need to be trained before you can expect them to perform as a fully functioning sales rep, right? That is going to really be a gate of how much they should be paid. And so we asked the question, in your organization, on average, how long does it take before a new sales rep becomes functional? So at what point do you consider them a trained and independent salesperson? And that leads us to finding number 6. There is no consensus on training guidelines. Look at how this chart spans, right? So you see the leading category is 5 to 6 months. But on either side of that, there's 10 to 12 weeks or 10 to 12 months. I want to call your attention to the extremes. All right, if you look on the far left, nearly 1 out of 10 VARs, 9.7%, this is the blue and the pink bars on the far left, they believe a rep is trained and independent in 8 weeks or fewer. All right, so you have 10% feeling that. Then if you go all the way to the far right, you see 11.6% say a rep doesn't reach that level until 21 months or more. That's the green and I'll call it the Carolina blue bars on the far right. That is 10 times the length of training period than the respondents on the far left. And to me, those are wildly different expectations for the same job function in, again, relatively similar organizations. We're not comparing pharmaceutical sales reps, right, with machinery sales reps. We're sending this out to value-added resellers who are in hospitality, retail, and grocery, right? They are certainly more apples to apples than they are anything different. But really struck me there that some folks will say, yeah, in 8 weeks, 2 months, you are good to go. You know everything you possibly could. And then I've had some feedback as we shared this, the entire study online, that people are saying, really, it takes 2 full years for somebody to get up to speed? Like, there has to be a way to accelerate that. And again, you can see where the most common fall right there in the middle, but there are certainly some extremes in that as well. So we were hoping with this that there might be something conclusive, that here's when you should plan your training program for how long it should take, whether it's 6 months or 18 months or whatever it is. But clearly these span all around. Again, most common is between 10 weeks and 12 months, but that is quite the span there in terms of what is most common. The one thing that I will say is from an anecdotal standpoint, raise the bar of the training that you provide. When you have somebody new and you're trying to get them up to speed, give them the long version of the story. Give them the why behind it. Give them the details. Have them spend a lot of time with you if you're the owner and you're the best salesperson. Have them really spend a lot of time shadowing you and explaining what's going on in each one of those. If they are not fully trained if they don't know all the ins and outs, if they don't know your product set, if they don't know your customer base, if they don't know the industry very well, if they don't know the competition, what are they going to sell on? Not value, it's going to be price. So if you're frustrated that, man, my reps, all they do is sell on price and they're always trying to work me down and say, let's offer it for less and less, and I'm getting these lower margin deals, it might not be a person issue, it might be a training issue. And so really make sure you spend time with them in however long it's going to take you. If you are in that 10 to 12 weeks, make sure it's a very intense training program so they really understand why you feel the way you do and why you do things inside of your organization. So again, whatever the length is, make sure that it's intense. Also make sure that it's something that is written as well. Now, nobody from IBM is on this call, right? Or nobody from a Fortune 50 company is on this call. So I don't expect you to have your own training department or to have some 200-page binder that really teaches somebody all the ins and outs of selling, but at least have some sort of progression that you can sit down with the new sales rep and say, here are the things you're going to need to know, and let's make sure you're being exposed to all those things. And as you continue to roll out that training with other sales reps, you'll be able to refine it and see what things can you add to it, what things do they need to experience. Don't just have them sit next to you, listen to you, and go, you ready? You good? You've heard me. Go knock yourself out. I actually learned this through youth soccer coaching. I've done it for many years, but they offered a free coaching clinic, and I'm like, hey, I'm always up for learning more. So sat down with a college soccer coach, and there were only a handful of parents that showed up. Everybody must have thought they were soccer coaching experts at that point. And so this is a longtime college soccer coach, and he just sat down and he said, you guys, did you all play football, throw football around when you were a little kid? And I said, yeah. He said, how'd you learn to throw a football? They're like, I don't know. I picked up a football and threw it. He said, yeah, that's how training works. You don't just stand there and describe to them how to throw a football. You don't just throw a football and talk it through with them and say, see, do you get it? You have to make sure that there is a ball in their hands and they are doing those things and you are refining them as they are engaged in the behavior. So make sure that your training program isn't just you lecturing to them. Make sure your training program follows the 3 steps of delegation that can be summed up in 6 words. I do, we do, you do, right? I do is you do the job well yourself. We do is you and the new sales rep do the job together, right? And then you do is the sales rep, the newer sales rep is doing the job and you are monitoring them, you are watching them and giving them the thumbs up and tweaks along the way. You don't want to rush through any of those steps. You don't want to skip over any of those steps because you know what happens if you don't follow I do, we do, you do? You're going to end up in doo-doo. All right, so make sure that you are spending the right amount of time and you're investing that time with your sales rep and getting them up to speed in everything that they need to know about your sales process. All right, last thing I'll share with you, it's not a chart. We ended the survey with a catch-all question allowing VARs to share their thoughts and comments related to sales compensation. And these are some of the more interesting replies. There's not a one-size-fits-all plan that I know of. There's also so many options, so many downfalls to each model, really trying to find a fair way that works for both the reps and the company. And then this is very common. It's complicated. We don't have it all figured out. We have a few variations of comp plans today, still trying to figure out the best option. With so many offerings and services, it's hard to find a plan that works the same for all offerings. The new SaaS model is a difficult transition. We're learning as we go. And then I'm very much looking forward to ideas on changing our plans. So you can see, nobody considers this boring, standard pat. Here's the formula, knock yourself out. This is still in very much a test and measure approach. And hopefully a lot of these data points here gave you some models to consider and some other opportunities for you to expand your knowledge. So, all right, so that is all for the survey that we have. Before we take your questions, again, if you want to weigh in from an audio standpoint or send us a chat, or you can send us an email offline and we can look at it. The RSPA offers, again, certification, education, hotlines for legal, security, sales, and business advice, also discounts and other services to assist members with becoming and remaining successful, and also the 2 signature events, Retail Now and Inspire. If you want to know if RSPA membership is right for you, check out our ROI calculator and membership at GoRSPA.com. venetian.org. And again, retail now, save the date, August 2nd through 5th at the Venetian in Las Vegas. Retail now is where the industry meets. All right, so let's get to our Q&A portion. Again, this is your opportunity to weigh in with some questions. Feel free to unmute yourself, and you can weigh in with your question or your observation. Is there somebody out there who would like to go first? And Kathy, I'm not sure if we have any questions that came in over the chat. All right, we do have one that I see here from a chat standpoint. It says, is there a commonality in the VAR profiles between those who front load comp and those who pay comp in perpetuity? That's a good question, Matt. So we did not break it down to that degree. You know, the only questions that we asked were what verticals do you play in? And then also from a recurring revenue standpoint that they offer. And so we did see, and I alluded to it a little bit, but you'll be able to see it in the report a little bit more in depth. Those who offer a lot more or receive a lot more recurring revenue, they will either do the lump sum or they'll kind of do a split portion of it. They're not doing declining. They're not paying it out over many, many months. That was really the only delineation that we saw in that regard. So there wasn't anything that was really specific in terms of whether it was your size or number of salespeople or things like that. We did see it kind of run the gamut from a revenue standpoint in that regard. So good question there. Thank you for that. Another question, this is how can some VARs afford to pay over $170,000 to a sales rep? Great question. And so there's a combination of a few things. One is obviously the size of the reseller and the sophistication that they have. Are they selling only a handful of products? Or are they offering a wide range? Are they selling into multi-lane grocery stores, or are they selling into independent retail shops? The folks who obviously are larger, have more of a regional presence, and will make some of these big sales, they're the ones who are able to do that. The other thing is, philosophically, again, you see so many well-paid sales reps on here, on the charts that we had. You can't cheap out if you're trying to get good sales talent, right? We have had now, as we're recording this, 111 or 112 consecutive months of job growth in the United States, and Canada is very similar in that regard. So we've had a strong and growing economy for the past, 9 years, 10 years, something like that. And so the number of sales reps who are looking for work is way down, and the number of good sales reps who are looking for work is way down. And you know, the way to draw a sales rep out of somebody, away from somebody else, you got to pay them. And so we are seeing that resellers are having to spend more than they're comfortable with in terms of what they're paying. And so they feel this is a way for them, even though they don't like having to pay that much money, in order for them to keep making these big deals and keep moving the business forward. You got to pay, or else you're going to get a poor sales rep. You get a poor sales rep, sales dry up. And they're really hoping that these reps can bring in a lot of these recurring revenue deals, because that's really going to pay off and raise the value of the business. Okay, any other questions that have come in? Anybody want to weigh in from an audio standpoint? We're happy to hear those. You can just unmute yourself. All right, if not, we have just one final question here before we wrap up. Question says, why do most VARs pay now versus stretching out? It seems like that would hurt cash flow, and it certainly does. But what they're looking to do is incentivize a sales rep to go make more sales. So that's a big one, is they, when they sold a big deal in the past, not on the SaaS model, the rep was happy with the big chunk of pay that they got, and it made them hungry to go get more. So that's one of it, is the incentive. The other portion of it is the simplicity standpoint, right? It's pretty straightforward. You sell this deal, which is going to be valued at X, and you're going to make X amount off of it. That excites sales reps. If you start getting into this perpetuity, percentages, overtime, things like that, that could really get confusing for a sales rep, and they won't be as driven to go get something because they won't be able to put a dollar amount on it. The last thing you want to do is have your sales rep say, how much money are you going to make off this deal? And they're like, I don't know, could be this, could be this. I really don't know. Let's see how it comes in. That is not aligning their thinking to align with the business. Alrighty, well, that is everything that we have for today's analysis. Thank you, everybody, for attending today. Thank you for everybody who weighed in with questions. And finally, a thank you to the many RSPA members who helped shape this survey. The root of this survey was an RSPA education committee called back in the fall of 2019. And somebody said, you know, it'd be really valuable, talk about comp at Inspire, have a full day, or a half day, because that's how the education sessions are at the Inspire event, dedicated to sales comp. And somebody said, it'd be great if we had a study that went along with it. And then so we took that idea from an RSPA standpoint, bounced it off a lot of our VAR members, and also the staff looked at it as well. And none of these questions came from a boardroom or a think tank, right? It was all RSPA members saying, you know what information would help me develop my business is this. We really want to thank everybody who participated in the survey and everybody who helped craft it. So thank you very much for your time today. And again, remember, our goal at the RSPA is to accelerate the success of our members in the point of sale ecosystem by providing knowledge and connections. For more information, you can visit our website at gorspa.org. Again, you can see that, www.gorspa.org. Thanks everybody for attending, and goodbye